Hey, lovely traders. Today on Trader Emotion, you're listening to The Disciplined Trader by Mark Douglas. If you want to make consistent profits in trading, knowing strategies isn't enough. You need iron discipline. Mark Douglas's book, The Disciplined Trader, will completely transform your trading psychology. Ever wonder why 90% of traders end up losing money? This book teaches you how to control emotion, fear, and greed, and how to become mentally strong in your trades. If you're ready to move past losses and discover the real secret to making profits, listen to this audio and find out how this book could change your entire trading career.
The core idea is 1. The art of trading. Have you ever thought of trading as an art? Is trading really just about technical analysis, following charts and keeping up with the news? Or is there something much deeper beneath the surface? According to Mark Douglas, most people enter the world of trading with the hope of making money. Some seek financial freedom, while others chase the thrill and adrenaline rush. But very few truly understand that trading is in fact an inner journey. It is a test of self-control, discipline, and mental strength. Right from the beginning, Mark confronts us with a mirror-like question: why are you trading? If your answer is simply to make money, then you haven't yet grasped the deeper essence of trading. In any profession, if you want to become skilled, you have to follow a process, whether it's medicine, engineering, or music. Each requires academic training, time to gain experience, and a clear structure. But trading? You could open a trade today if you wanted to. No mandatory exams, no licensing requirements. Because of this easy access, many people mistakenly assume it's easy. But the truth is, while starting to trade may be simple, continuing to trade successfully is extremely difficult.
Your biggest opponent in trading is yourself. Your own fear, greed, ego, expectations, and the tendency to not learn from mistakes. When you make a profit on a trade, it feels like you're smart. But when you incur a loss, it feels like the market is against you. However, Mark says the market is never against you. You simply haven't learned how to understand it yet. Many new traders jump into the market and react impulsively. They think, this stock is going up, I should buy it now. Or, the news is bad, I should sell immediately. But what do successful traders do? They don't react. They act with intention. They plan. They stay mentally prepared, calm, and confident. The ones who win in trading are the ones who first gain control over their own minds. In any form of art, an artist channels their inner thoughts, perceptions, and emotions into creating something meaningful. In the same way, a trader combines emotion, mental preparedness, and judgment to make a well-informed trading decision.
Just as a painter blends colors on a canvas with deep emotions from within, a trader pours experience, patience, and mental clarity into every trade. A single misplaced stroke can ruin the beauty of an artwork. Likewise, one mistake in trading can wipe out an entire account balance. That's why there's no room for emotionally driven decisions in trading. It's an art form where discipline and mental balance are the primary colors. New traders often expect the market to move according to their plans. They want to win every trade. But a seasoned trader realizes that not every trade will be profitable. Losses are part of the reality. Acceptance brings freedom. When you understand that each trade carries a possibility, your mind becomes calmer. That's when you begin to see trading as a game of process, not just results.
One of the biggest mistakes traders make is having expectations. Someone enters a trade thinking, this one will give me a 10% profit. But the market never guarantees anything. It only offers probabilities, never certainty. The moment you expect certainty, you're inviting disappointment. Successful traders understand that every trade is just a possible outcome. That's why they don't get emotionally attached to a single trade. Instead, they assess whether the setup aligns with their trading plan. A trading plan is a mental framework that helps you make decisions. So why is this plan so important? Because every decision you make within a trade comes either from habit or from emotion, unless you have a plan. Without one, you'll enter trades emotionally and exit them out of fear or greed. A trading plan means you already know what actions you'll take in advance. For example, when you'll enter a trade, when you'll exit, how much loss you can tolerate, and how much profit you'll take. Just like a pilot becomes skilled through repeated training, a trader becomes proficient by consistently practicing specific actions. This repetition builds confidence, and that confidence is what frees you from fear and hesitation.
Success in trading ultimately means building a deep, reliable trust in yourself. While it's important to have a solid plan, what matters even more is your ability to follow that plan. Do you trust yourself? Can you overcome fear? The answers to these questions shape you into a true artist in the craft of trading. Trading isn't just about reading charts or applying strategies. It's an insight-driven art form, a psychological battle where your real opponent isn't the market, but you. The sooner you realize that without mastering your own emotions, expectations, and fears, you won't survive in the trade, the sooner you'll begin transforming into a successful trader. The strongest trader is the one who maintains the greatest control over themselves.
Core idea 2. Have you ever seen someone who, despite countless efforts, keeps failing time and time again? They have the knowledge, the experience, the tools, yet somehow success remains out of reach. The loser's game tells the story of that all-too-familiar trader, the one who keeps trying only to keep losing. And the reason for these losses isn't external at all. It lies in an invisible inner battle. Let's dive into this chapter, where Mark reveals how a trader's own mind can become their greatest enemy.
Usually, when we think of games, we think of ones like football, cricket, or chess. These are what we call winner's games. In these games, control lies in the hands of the player. The more skilled player wins. But there's another kind of game in the world that Mark refers to as the loser's game. In this kind of game, the key to winning is to make as few mistakes as possible. He gives the example of a tennis match. In professional tennis, the player who scores more points wins. But in amateur matches, most points come from the opponent's errors, hitting the ball out, into the net, or mistiming a shot. Trading is much like that amateur tennis. The strategy to win here is to avoid making mistakes. So what does a mistake mean in trading? This is a very important question. In trading, a mistake doesn't just mean losing money. It means entering a trade without a plan, not setting a stop loss, closing a profitable trade out of greed, making decisions before fully understanding the market, and trading based on emotions. Mark says most traders lose because they can't control themselves. The market never attacks anyone personally. It is a completely neutral system. But the problem arises when we take the market personally. Imagine this. You just lost 3 trades in a row. At that moment, your mind starts telling you that the market is moving against you. Driven by emotion, you enter another trade, hoping to recover your losses. This situation is called revenge trading. This is the classic loser's game where you try to win with emotion instead of analysis. We all hold a certain image of ourselves. I'm smart. I make good decisions. I don't make mistakes. But the market constantly challenges that self-image. When we take a loss, the mind says, "You failed. You're not good enough." At that point, we have 2 possible reactions. Number 1, acknowledge the mistake and learn from it. Number 2,
blame someone else, and make the same mistake again. Most traders choose the second path, and that's exactly where the loser's game truly begins. Many traders believe they're brave. They think, I'm not afraid, I can take any trade. But trading isn't about courage. It's about discipline and emotional control. Often, we see traders suffer huge losses in a single trade, yet still refuse to exit. Why? Because they believe it will bounce back, or they think, I'm not the kind of person who accepts a loss. This pride, this stubbornness, all of it fuels the loser's game. The curse of not being able to accept a loss.
Mark simply says you can never win if you don't learn how to lose. To survive in the market, you have to learn to admit your mistakes, learn from them, and try again. In trading, the faster you can exit a losing trade, the more skilled you become. The longer you delay, the bigger your loss grows and the deeper you fall into the loser's game. Mark says you cannot control the market's direction, but how you react is completely in your hands. A successful trader never tries to force the market to lose. They only try to control their own reactions. Your power as a trader lies not in controlling the market, but in controlling yourself. To get out of the loser's game, you must pass through 4 mental stages. Number 1, unconscious incompetence. You don't know that you're making mistakes. Number 2, conscious incompetence. You realize that you are making mistakes, and that realization is painful. Number 3, conscious competence. You know what to do and deliberately follow the rules. Number 4, unconscious competence. You have become so practiced that following the rules has become second nature. This is the example of the winner's game, the way out of the loser's game.
Now the question arises, how can you free yourself from this exhausting game of trading? Number 1, create a clear plan. Write down exactly when you will enter a trade, when you will exit, and how much loss you are willing to tolerate. Number 2, treat every trade as an event. It's not a reflection of your mental worth. You are neither successful nor a failure. A trade is simply a possible outcome. Number 3, see mistakes as opportunities to learn. A mistake doesn't mean failure. It's a sign of a gap in your mindset. Number 4, separate your identity from trading results. Losing a trade doesn't mean you're a bad person. It just means you made a wrong decision. Number 5, commit to following the rules. Breaking rules means you are stepping back into the losing game. If you keep losing in trading, it's not your opponent's fault, it's yours. If you can't control your emotions, ego, fear, and expectations, no matter how good your analysis is, you will lose. But if you learn how to follow rules, keep your emotions calm, and admit your mistakes, then gradually you will exit that loser's game and enter the winner's zone. Trading is no ordinary game. It is a mental battle. The weapons in this war are patience, self-discipline, and the ability to understand your own limits. If you truly want to succeed, you have to conquer that inner loser within yourself.
Main idea 3, trader's perspective on cutting losses. The trader's viewpoint on minimizing losses, illustrated. You are a trader. At a glance, you're staring at the monitor. The red color of the candlestick is gradually growing. Inside you, there's a suppressed tension. You wonder how much further it will drop. You have to make a decision. Should you cut losses now or wait a bit longer? At this moment, the true test of trading psychology begins. Trading is not just about charts, candlesticks, or Fibonacci. Trading is a daily battle with yourself. And in this battle, the toughest task is accepting losses. In other words, cutting losses. It sounds simple, but is mentally extremely difficult. Let me tell you a story. Imagine a trader named Jack who sits in the market every day, following a trading plan. He has a stop-loss set. But as long as the trade is not profitable, he keeps moving his stop-loss further away. He thinks the price will bounce back and turn a profit. This mindset, this lack of mental resilience, is the root problem. People easily take profits, but struggle to accept losses, because loss feels like failure, like making a mistake. And since childhood, we've learned that mistakes mean punishment. As a result, traders don't want to accept losses because it hurts their self-esteem. Does cutting losses mean failure? That idea is wrong. Mark says taking a loss is not a failure. It's part of the business. Let's say you run a store. You buy some products, some sell, others don't. Some items become outdated and won't sell. You either discount them heavily or throw them away. Would you call that a failure? Absolutely not. It's simply part of business. Similarly, in trading, losses made according to your rules are never failure. Rather, they show professionalism. There are 3 main reasons why traders fail to cut losses.
Number 1. Finding alignment between your identity and trading. Traders often tie their self-esteem to the outcome of each trade. If they profit, they feel like a genius. If they lose, they think of themselves as a fool. As a result, a loss feels like a personal failure. This feeling is so painful that traders sometimes keep their eyes closed even when their stop loss is hit, hoping the market will reverse soon. But in trading, there is no place for emotion. Number 2. The false sense of control. Many traders believe they have figured out the market and that their calculations can't be wrong. Even when the trade moves against them, they refuse to accept that the market is going in the opposite direction. This mistaken belief that I am right, the market is wrong, is what prevents them from honoring their stop loss. Number 3. Fear. Uncertainty about the future. When a trade is showing a loss, cutting it means facing a clear loss. But if they don't cut it, they can at least hold on to hope for the future. In other words, cutting a loss means realizing it. Not cutting means hope continues. Although people feel sadness, they want to survive with hope for the future. If you don't learn to cut losses in a trade, over time those losses grow bigger. Then you become emotional, and a dangerous thing happens: revenge trading. Mark says, if you don't cut losses, it's not just a loss in trading. It lights a fire of emotion in your brain, and instead of analyzing, you enter the market seeking revenge. This revenge is what destroys trading careers. Cutting losses isn't a skill, it's a mental habit, and habits are built through rules, repetition, and a proper sense of self-worth. Remind yourself, you are a business person. Your job is to balance profit and loss and make the right decisions. Loss doesn't mean failure. It's a path to making better decisions in the future. Separate your identity from the outcome of each trade. You are not a failure just because a trade loses. You fail only when you don't follow your plan. View small losses with respect. These losses guide you, keep your strategy on track, and protect you from major disasters.
Let's say you've taken 3 trades. Trade 1 hits a stop loss of $100. Trade 2 hits a stop loss of $50. Trade 3 hits a target of plus $500. You took losses on the first 2 trades, but because the losses were small, you were able to stay focused and give your full attention to the 3rd trade. That's what professional mindset looks like, where losses are treated as costs, not as failures. You can never control the market, but who can you control? Yourself. If you can't cut your losses, you'll be destroyed, slowly or quickly. But if you can, you'll become a disciplined trader. A trader only becomes successful when they learn to control their emotions, accept losses as part of the game, and avoid tying their self-worth to the outcome of a trade.
Core Concept 4: The Dynamics of Goal Achievement. Imagine this. You wake up one morning and decide, From today, I'll trade regularly. I'll make at least 20% profit each month. Sounds great. The goal is clear, ambitious, and feels within reach. But in reality, just 4 or 5 days later, things start to change. A few trades go into loss, your mood takes a hit, your confidence drops, and a quiet voice inside starts asking, "Can I really do this? Or was this dream just an illusion?" In this chapter, Mark Douglas takes us deep into the mental battlefield where our goals clash with inner conflict. He explains that while setting goals is important, being mentally prepared to achieve them is equally essential. We all operate with two minds, the conscious mind and the subconscious mind. With the conscious mind, we set goals. I will become a disciplined trader. I will consistently make profits. I will follow my rules. But the subconscious holds all our old habits, beliefs, fears, and sense of identity. And if that subconscious doesn't accept the new goal, no matter how hard the conscious mind tries, we won't get there. It's like driving. Your hands are turning the steering wheel forward, but the wheels are spinning in reverse. The 3 major mental traps that block goal achievement. 1. Limiting self-identity. If deep down you believe you're not a successful trader, or you always end up losing, your subconscious will resist. That resistance shows up in your behavior, decisions, and reactions. In other words, your mind doesn't believe what you're trying to become. 2. Negative impact of past experiences. If you've had big losses in the past, or someone told you no one ever succeeds at trading, your subconscious will build a wall of resistance. You'll want to succeed, but that old fear will keep pulling you back.
3. Outcome-dependent mindset. You think, if this trade is profitable, then I'm a good trader. If not, I'm a failure. This mindset makes you emotional and disrupts your progress toward your goals. Mark says, successful traders don't focus on outcomes, they commit to their process. The right framework for goal achievement. Step 1. Define clear and measurable goals. Saying I want to make a profit is not a goal. A real goal is, I will take 3 high-quality setups each week and respect my stop loss. The clearer the goal, the easier it is for the brain to process. Step 2. Build the habit of belief. If your subconscious mind doesn't believe in your new goal, you need to engage in daily positive self-talk. Say things like, I follow the rules, I stick to my system, I control my losses, and I remain neutral in every trade. When repeated regularly, these affirmations help your subconscious mind absorb new information over time.
Step 3. Small but consistent wins lead the way. Mark says reaching your goal isn't like a 100-meter sprint. It's more like climbing a mountain, slowly, deliberately, paying attention to each step while catching your breath. Start with a simple target. Can I follow my stop loss in 5 trades? Then, can I remain mentally neutral in 10 trades? These small wins are what will carry you toward your bigger goals. The path to achieving a goal is about falling in love with the process. If all you want is the outcome, profit, but you dislike the process, risk management, discipline, focus, then you'll never achieve real success. Loving the process means journaling your trades, analyzing your mental state every day, regularly reviewing your position sizing, and breaking down each trade afterward. Embracing the process means you're truly walking the path of a professional trader. Accepting obstacles is not failure, it's an opportunity to learn. Once you set a goal, challenges are inevitable. In trading, losing 5 trades in a day, losing confidence, breaking your stop loss out of emotion, these will happen, but each one should be seen as a learning opportunity. Mark says if you made a bad decision, don't blame yourself. Ask, why did this happen? What can I do differently next time? That mindset brings you psychologically closer to your goals. The speed at which you reach your goals depends on how you see yourself. If you still view yourself as the same old failing trader, no matter how big your goal is, it won't truly drive you. Instead, you must see yourself this way. I'm on the path to improvement. I'm learning every day. I'm moving in the right direction even if I haven't reached the peak yet. This self-identity, this new version of yourself, will drive you toward your goals at an incredible pace. Goal setting isn't just about desire, it's a mental transformation. You must go beyond your internal resistance, limitations, beliefs, and ego to build a new mental framework. Successful traders set clear goals, love the process, learn from every mistake, and retrain even their subconscious mind.
Core Concept 5: Managing Mental Energy. When we think of trading, what comes to mind is a dynamic screen, constant chart monitoring, and red-green candlesticks flashing by. Physically, we may just be sitting, barely moving our hands, but by the end of the day, the fatigue creeps all the way up our necks. The question is, why does this happen? Mark Douglas explains that mental energy is just like physical energy, a limited resource. Every time you make a decision, control your emotions, stay patient, or suppress fear, you're using up that mental energy. The mind is like a battery, limited charge, unlimited demand. All the mental work we do throughout the day drains that battery. In trading, every decision, opening or closing a trade, reacting to market fluctuations, consumes mental energy. So if you don't manage this energy properly, your decisions become emotional, disorganized, and risky. There are 4 major sources of mental energy depletion. 1. Trading without a planned system. Jumping into trades on impulse throws you into mental uncertainty. You're constantly second-guessing. Is the price going to drop now or rise? This uncertainty drains your mental energy fast. 2. Over-analysis. Spending endless hours on charts, reviewing indicator after indicator, builds intense mental pressure. When you get caught in a loop of indecision before making a move, it exhausts you and often leads to poor choices. 3. Lack of self-confidence. Doubting your trading system or your own decisions keeps your mind in a constant state of internal conflict. Should I keep this trade open? Should I take the stop loss? These constant questions put your mind under relentless stress.
4. A distracted mind. If your mind is preoccupied, family concerns, poor health, or the emotional weight of past losses, your focus gets disrupted. This leads to rapid energy depletion and makes it difficult to make sound decisions. How can you tell? Your mental battery is running low. Signs include reduced willingness to take a risk, increased fear compared to before, repeating small mistakes, suddenly ignoring your trading plan, overtrading unnecessarily. These are clear signs that your mind is still fatigued. You've lost clarity of thought. 5 strategies to preserve mental energy. The most important question right now: how can you preserve and recharge your mental energy? Number 1. Take regular breaks. Incorporate break rituals. Every hour, take your eyes off the screen and go for a short walk. Close your eyes and focus on your breathing for a few minutes. Why? It calms your nervous system and helps your mind refocus. Number 2. Set decision limits. Decide how many decisions you'll allow yourself to make each day. Cut out unnecessary analysis. Pro tip: don't take more than 3 trades before 1 p.m. Number 3. Create a routine. The mind thrives on routine. Starting your trades and performing your analysis at the same time each day helps keep your mind calm and prevents wasted energy. Number 4. Prioritize sleep and rest. Lack of proper sleep weakens your mental processes. Even missing a single night's rest can increase fear,
doubt and hesitation the next day. Number 5, keep a trading journal. At the end of the day, reflect. What decisions did you make? Why did you make them? Reviewing this helps lighten the mental load and prepares your mind for the future.
Number 1, energy rebuild. Create your own mental recharge station. It's not just about spending energy. It's also important to rebuild it. Give yourself some time every day. Listen to your favorite music. Practice meditation. Spend time with your family. Engage in stress-free creative activities like reading a book or painting. These practices will mentally prepare you for trading the next day. So how do you maximize your energy usage during trading? Mark Douglas makes a beautiful comparison. A trader is like an archer. Each trade is an arrow. If there's no focus, if your hands shake, the arrow will miss the target. That's why he recommends, before every trade, close your eyes for 10 seconds and remain still. Recall your plan: entry, exit, stop loss. Start each trade with the mindset, I will remain calm, I will follow my rules. These small habits will give you immense mental strength. Don't do anything during trading that drains your mental energy. Use the same level of decision-making and strength for every trade. Don't rely on guesswork like, this happened before, so it'll happen again. Don't be influenced by chat groups or what others are saying. Don't exhaust your mind by constantly switching between multiple time frames. Don't sit down to trade when you're in a bad mood. Trading means keeping your inner strength in control. It means putting your mind through a new test every single day. And the key to passing that test is to understand, respect, and strategically manage your mental strength. Your real opponent isn't the chart, the market, or the news. Your real opponent is your tired mind. If you can conquer that, you'll become a truly disciplined trader.
Core Concept 6, the psychology of price movement. The movement of price and the game of the mind. Is the market truly intelligent? What lies behind the prices we trade every day? Many traders believe some giant invisible force drives the price. Hedge funds, banks, deep conspiracies. Others think price simply follows technical patterns. But Mark Douglas opens our eyes. Behind every price movement lies fear, greed, hope, and hesitation. In this chapter, he teaches us why price never moves in a rational, linear way. It moves in response to collective psychology. Number 1, how is price determined? We learned in school that price is based on supply and demand. That's true, but in trading markets, it's a little different. Here, price is determined by the collective reactions of buyers and sellers. When buyers are more enthusiastic, prices go up. When sellers are more fearful, prices fall. In short, market prices are a reflection of traders' emotions. Number 2, expectation versus reality. Why does price deceive us? Let's take a simple example. You assume Apple stock is going to rise because they're launching a new product. You buy in, the price goes up a little, then suddenly drops. You're stunned. Mark Douglas explains that this confusion happens because you thought price would move based on reality, but in truth, price moves based on the collective expectations of traders. A trader doesn't observe the market, they create the market through their own hopes, fears, and beliefs. Number 3, why new traders often get it wrong. Most new traders think the price has found support here, so it has to go up, or the news is positive, so price must rise. But price movement is never guaranteed. Until the market as a whole acts in agreement, price remains a game of probabilities. Mark says, if others don't share your outlook, your expectations will fall flat. Number 4, every candlestick tells a story. Every price,
Every bar, every movement in the market tells a story. Price suddenly rises, someone aggressively bought in. Price drops, someone got scared and sold. It gets stuck in a range, someone's quietly observing. If you can understand the emotions behind every movement on the chart, trading becomes a form of emotional analysis.
Number 5. Price movement is a collective dance. When fear sets the rhythm and greed sets the beat, everyone panics. People start selling and the price drops. When everyone buys, the price rises. But this movement is never a straight line because people never think in the same way. That's why the market sometimes pulls back, sometimes shows fake breakouts, sometimes stays in a range. These are not magic tricks. They are the reflection of the complex flow of human psychology. Number 6. It's not information, but reaction that drives the market. The same news can trigger two different responses. Suppose a company's profit has increased by 20%. One group thinks, great, profits are up, let's buy. Another group thinks, only 20%? I was expecting 50%, let's sell. As a result, the price falls, even though the news was good. As Mark says, it's not the information itself, but how people interpret it that determines the direction of price. Number 7. Mark Douglas once asked a deep philosophical question. Do you see the market or do you see yourself? Because often, what we think we're seeing is not the market. It's a reality painted with our own fear, hope, or past trauma. If you're losing money, it feels like the market is against you, but the market favors no one. It's neutral. It's your emotional filter through which you interpret the market. Number 8. How do successful traders understand price psychology? They know no trade is certain. No piece of news is the final word. Price is always a game of probabilities. They look at each movement as a new possibility. They don't think, this pattern or news guarantees a win. Instead, they think, this is a high probability setup according to my system. I will trade it following my rules. That's why they remain calm. They are not reactive, they are intentional. If they incur a loss, they don't take it personally.
Number 9. The trap of misinterpreting emotional triggers. During trading, there are some common psychological traps. Number 1. This time it will definitely go up. This is the trap of greedy expectations. Number 2. I got tricked again. This stems from taking trades personally. Number 3. If I don't enter now, I'll miss out. This is FOMO, the fear of missing out. Number 4. Everyone is saying the price will drop. This reflects herd mentality. Each of these traps confuses your ability to read price movement accurately. Number 5. The right mindset for interpreting price movement. Mark says the correct mindset is, I don't know what the market will do. I just act based on probability. I manage risk on every single trade. I understand that price moves based on human emotions. This mindset builds a disciplined trader.
The core idea is 7. 7 steps to success. The journey of a disciplined trader. Imagine, one day, you decide, I will achieve freedom through trading. Not a regular office job. The market will be my life. Dreaming this dream is easy, but the journey to turn that dream into reality is a complete mental and emotional battle. Mark Douglas shows us the path in this chapter. Where do you start? How do you learn from mistakes? How do you move step by step toward becoming a successful, calm, and self-disciplined trader? This chapter is not just about trading. It's a masterclass in personal transformation. Step 1. Acknowledge that the problem is not the market, but yourself. Often we blame the market. This market is unfair. The news was good, so why did the price drop? It was clearly a breakout, but it turned out fake. But Mark Douglas says the first step to success is taking responsibility. You realize you can't control the market, but you can control yourself. That moment of responsibility, when you admit your emotions, expectations, and failures affect your trading decisions, is where transformation begins. Step 2. Understand your mental programming. Mark says we all grow up with certain subconscious beliefs, that nothing good comes without hard work, that if something bad happens, it's someone else's fault, or that losses mean failure. These beliefs are dangerous in trading, because trading is the only place where hard work does not always equal success. Things won't always go according to plan. You don't learn without losses. So if you don't identify and reprogram these inner beliefs, you'll keep making the same mistakes over and over again.
Step 3. Make an emotional contract with yourself. Mark Douglas teaches a powerful technique in this step. Create a kind of mental agreement or emotional contract with yourself. In this contract, you promise, I am not here to win or lose in the market. I am here to learn control over myself. I will trade following the rules. Whatever the result may be, I will be mentally prepared for every possible outcome of each trade. This mental preparation builds a true disciplined trader. Step 4. Develop a specific trading method and build trust in it. Successful trading begins with a specific, measurable, and consistently repeatable system. But simply creating a strategy is not enough. You must have faith in that strategy. This faith is built by, number 1, backtesting, number 2, regularly keeping a trading journal, and number 3, cultivating the habit of following the trade plan. If you set 5 rules for a trade, then follow every single rule, whether you make a profit or a loss. Mark says, discipline is the bridge between the system and confidence. Step 5. Don't take trade results personally. Successful traders know that each trade is a statistical expression. In other words, each trade is like a coin toss. Your strategy might have a 60% success rate, but no one knows which trades will win or lose. Therefore, a loss doesn't mean you're a bad trader, and a profit doesn't mean you're a genius. If you tie your trade results to your personal ego, you will overtrade, take revenge trades, and break the rules. These 3 things will destroy your trading account.
Step 6. See every trade as a learning opportunity. The market is the perfect teacher. It teaches something new every moment of every day. If after each trade you ask yourself, did I follow my rules? Did my emotions influence this trade? Am I interpreting the market my way, or am I accepting reality as it is? Then gradually, you will become a trader with a reflective and learning mindset. Your trading journal will be your greatest teacher. Step 7. Turn discipline into a habit. This is the final and most important step. Practice trading discipline so that it becomes second nature. For example, even if a signal appears, don't take the trade if it doesn't fit within your rules. After a few wins, don't let greed cause you to tighten your stop loss. Be satisfied even if you take only one trade all day because it was planned. Mark says, true success is not in predicting the market. It is in consistently behaving in a way that aligns with your rules regardless of the outcome. When you truly feel this, you will become a disciplined trader. This is the first time you've heard the beautiful audiobook of The Disciplined Trader on Trader Emotion. What audiobook would you like next? Don't forget to let us know by commenting. If you liked it, please share The Disciplined Trader with everyone, and don't forget to like and subscribe to Trader Emotion. Thank you for regularly listening to these wonderful audiobooks. Stay well, stay healthy, and keep listening to Trader Emotion.